In this video, I'm going to explain the trading strategy that has allowed me to withdraw over $300,000 in payouts from prop firms. And I'm not making this up. I'll show you several payouts I have here from well-known companies like FTMO, Funded Next, Alpha Capital, and many others. I've even made it into the top weekly payouts at Alpha Capital on 2 occasions. I'll show you both tables right here, and you can also verify this for yourself. You can go to my Instagram or Alpha Capital's Instagram and see that on those dates, they themselves posted these on their Instagram. There in the weekly payouts table, the top weekly payouts, you'll see someone named Benjamin. Well, that's me. Why am I showing you all these payouts so transparently? Basically, it's so you know that in this video, the person teaching you, the trader teaching you, is someone who actually makes money from trading. Because lately, on all social networks, both Instagram and YouTube, there's practically no one who shows these results as transparently as I do. I'm not showing you all of this information to simply gain applause. I am simply doing it so that when you are learning and carefully listening to other educators or indeed people teaching on platforms like YouTube, you will always ask them for thorough verification of all of these important things. Nowadays, there are a lot of people explaining trading, selling mentorship, selling courses, and they really don't show or prove that they actually withdraw money from prop firms. Nowadays, the vast majority of traders you see on social media trade with funded accounts. It's not like in the past, when many people traded with their own real capital. Therefore, today it's much easier to prove that you're profitable with prop firms. Simply uploading your payout with a QR code or with the company's signature visible is more than enough to prove and show your audience that, hey, you are a trader, a profitable person, and that you make a living from trading. If this is the first video you come across from my YouTube channel, let me introduce myself very quickly. I'm Benjamin from Spain, specifically from Seville, and I've been dedicating my time to trading for more than 7 years now. I'm a completely normal person. I come from a neighborhood, a very humble, hardworking area, and my previous job was as a security guard. I'll leave you here some images of what I used to earn back then, which was between 1,200 and 1,500 euros, depending on how many hours I worked that month. And little by little, I transitioned, I switched to trading until today, as I've already shown and proven to you with all these payouts. By the way, you can find more on my Instagram, which is linked below in the description, where I post valuable content about my trading strategy every day. In fact, I pretty much upload every single trade I take throughout the entire day so that all of you can learn completely and comprehensively for absolutely free. Now let's get to what really matters and what you want to know. What trading strategy did you use to achieve all those results? Well, as you can clearly see on the screen right now, we have 2 distinct scenarios. We have the comprehensive selling scenario, and we also have the equally important buying scenario. Basically, as we all know, in the market you can only either sell or buy. Well, I don't have different scenarios, no, not at all. Simply put, when the price, as you can clearly see here on the chart, breaks a previous significant high, that is, on the 4-hour, 1-hour, or even the daily time frame, what I consistently do is trade in the exact opposite direction, always. This approach helps me to capitalize on potential reversals in the market. Most likely, what you've been told your whole life in trading is that whenever the price breaks a high, it means it's confirming a bullish structure. And on the other hand, when the price is significantly breaking a new low, it clearly means that the price has definitively confirmed a bearish market structure. Well, as I'm also sure you know, the vast majority of people who invest and trade lose money. You can check this by going to the bottom section of any broker's website and you'll see a warning about the risks of trading. It will clearly state that between 80 and 90% of individual retail traders, that is you, me, or anyone else present here, consistently lose money when actively engaging in trading activities. Therefore, if the vast majority of people trade this way, that is, when the price breaks a high, they usually look to buy, and when the price breaks a low, they usually look to sell. What conclusion can we draw? Well, the conclusion is that you shouldn't look to sell when the price breaks a low, and you shouldn't look to buy when the price breaks a high, because that's what all the losers do, all the people who aren't profitable in trading. Therefore, what I did was adapt to this, and what I'm currently doing with the trading strategy I've developed, all those results I showed you at the beginning of the video, has been achieved by doing exactly the opposite of what the vast majority does. When the price breaks a high, I look for sales, and when the price breaks a low, I look for buys. Another important thing is the timing. As you can see, here I've shown you 2 time slots, 2 trading sessions. The opening of the London Stock Exchange and the opening of the New York Stock Exchange. Well, these times I've listed here are the hours that cover the London and New York Stock Exchanges in Spanish time. If you're from any other country, just go to Google or ask ChatGPT to convert the time for you. You enter 9 in the morning, 11 in the morning, Spain time, and then your country. And for New York, it's the same. The New York session runs from 2 in the afternoon to 4:30 in the afternoon. You enter it, set your time zone, and during those 2 time slots, whether it's London or New York, that's when we would be looking for these 2 scenarios. Either the price breaks a high or the price breaks a low. Why is it so important to only consider scenarios, whether for selling or buying, where the price takes out a high or a low during these specific time slots in London or New York at those market openings? Well, basically because during those times is when the vast majority of banking transactions take place. You have to keep in mind that the Forex market moves $6 trillion every day. When do all these transactions usually take place, and when does the price tend to move the most? Well, obviously during the openings of the most important markets, London and New York. It's also very important to stick to these time slots for a very simple and basic reason. If we're trading all day and watching the chart all day, we're going to see a lot of opportunities. You have to keep in mind that the more opportunities you see and the more hours you spend watching the chart, the greater your risk of losing money. Why? Well, basically, because you'll want to make all that time you're spending on the chart pay off. The vast majority of people, myself included in the past, are used to trading our time for money. And trading is the same. You're going to see trading as a job, and since you've spent 4 or 5 hours on it, you feel you need to get some results. For what? Well, to explain it to your wife or to justify it to yourself? In other words, you know you've spent 4 or 5 hours in front of the screen, and if you haven't executed any trades, you'll say, hey, I just wasted my time. Well, no, trading doesn't work like a job in a cafe or as an office worker in any other company where you're paid for your time. Trading isn't like that. In fact, with trading, there are times when, even if you spend a lot of time on it in a single day, you'll probably end up losing money. What's more, with a win rate of 40 or 50%, which, depending on the risk-reward ratio you usually aim for, is actually quite high, with a 40 or 50% win rate, this means that 60% or 50% of the days, you're going to lose money. That is half or more than half of the days you spend trading, you won't make money. Instead, you'll lose it. Therefore, the less time you spend looking at the charts each day, the better, because you'll have less risk and less exposure to the market. And also, of course, because within these time frames is when the market has the most volatility and when it usually sets the direction for the day. Most of the time, when the price is outside of these time frames, it tends to move sideways or create manipulations. When these time frames begin, that's when the big bank transactions, major banks and large funds come in and give the market its definitive direction, the direction the price wants to take. Therefore, outside of these time frames, I don't recommend looking for these setups. First of all, for optimization, because it's only within these time frames that there is greater direction and higher volatility. And secondly, as I've already explained, to avoid having excessive risk by being exposed to the market for too long. And before we move on to the various examples that I'm going to show you on the chart, so you can see that the pattern I've been talking about of taking out a high and reacting downward and taking out a low and reacting upward tends to work quite often and with a high probability and success rate. I'm going to show you how, with this strategy, not only have I withdrawn all the payouts I've already shown you, but for those who don't believe it, I'm showing here that I have currently withdrawn $91,000 in payouts with Funded Next. I'm not making this up. I'm going to hit refresh so you can see that this is completely true. As you can see, just with this company, I've withdrawn $91,000, and with Alpha Capital, a total payout of, I think it's $96,000. In other words, just with Alpha Capital and Funded Next, I've withdrawn around $180,000. It's absolutely insane. Not only that, but this month here you can see 2 accounts I have with Neoma, another funding company, accounts of $150,000 each. Here you can see that I currently have a balance of 9,848 up, which means more than a 6.5% profit. I'm going to withdraw this now. Here you can see the rate I have. Absolutely all the statistics. My biggest gain has been 10,155 and my biggest loss 2,346. I'm going to refresh so you can see this is completely true, and in a few days I have the payout ready. Not only that, I have another account in Neo with over 150,000, this time with a 7.38% gain, about $11,000 in profit that I'm going to withdraw from this prop firm. This account has a win rate of 61%. Here you can also see the statistics, where my maximum loss on a trade is $2,000 and my maximum profit is $10,305. Obviously, these statistics might be a bit skewed. Why? Well, basically because I take partial profits, set break-evens, and I usually count the partials as trades. So they might be a bit skewed because of that. But as you can see, the win rate is quite high, 61% on this account and 50% on this one. You can see how profitable this trading strategy is. With these two payouts, I would basically be at September already, which I'm going to withdraw right away. I think I have about 4 or 5 days left to do the payout, around $20,000 from just one prop firm. Not only that, but I also have several withdrawals available from other firms as well. I'm showing you all of this so you can see that the examples I'm about to teach you and the person, me in this case, who is explaining all of this to you, really does make a living from trading. I noticed that maybe in the recording you won't be able to see this statistic because the camera was in the way, but anyway, I've moved it here and now you can see the win rate I was talking about here as well, okay? I'm refreshing it again so you can see that I haven't done anything. Here you have it, 61, and here you have the other account, 50%. Again, I'm doing all this to show transparency in this sector, which is very much needed. Now let's move on to the chart examples, so you can see that all of this happens constantly, and not just with examples from years or months ago like other strategies. No, this phenomenon basically happens almost every single day and every single week. In fact, I am going to show you some very recent and pertinent examples, even from this very same week in which I am currently recording this particular video. Here we are on the euro-dollar pair, and basically what we have to do is wait on the daily, 4-hour or 1-hour time frames. These are the time frames I personally recommend and the ones that work best. We would need to wait for the price to break a high or a low during those time frames I mentioned earlier, at the opening of the London Stock Exchange and the opening of the New York Stock Exchange. At that point, we'll be watching closely when the price breaks a high or a low, we'll see how it reacts, we'll check if it gives us our entry confirmations, and once it does, we'll enter that trade. Let's look at this example we have here. And as I explained to you earlier, and as most people explain, when the price breaks a low or a high, they would be talking about a change in structure. What is it that we can observe here? Well, basically that the price breaks a low. We can see that we're on the 4-hour time frame and just look at the rally the price makes. You can practically see how it drops very slowly, takes out the low we have here. I think it's a low that pretty much everyone would mark. I mean, it's obvious that this is a low. The price takes it out. At what time? Well, we can see the time here, 4 in the afternoon. We would be within our New York session and the price, boom, goes up. Where to? Where is the price going? Well, basically it goes to the other liquidity point, as I mentioned earlier. It takes out this high, clears out all those positions, all those pending orders, buy stops, buy limits, sell stops, stop losses, profits. That interbank algorithm goes to take all those positions and clears them out. What does it do next? Well, basically it pulls back. How can we anticipate all of that? How can we get in on that? Well, you can see here how the price clears it outside of regular hours, outside of that session. This would be London hours. Boom, here at 2 in the afternoon, New York opens around this area, and we could enter here in this M5 imbalance that the price has left us. We can move to a slightly higher time frame, like M15, okay? Here we have it. And here we see how at 2:15, 2:30 and 4:15 we could have entered the trade either on M15, on M5 as I showed you. What is it that we will be looking for? Well, basically that the price gives us a strong move, meaning that the price is telling us indirectly, hey, I don't want to be in this area. That's what we would be looking for. What entries could we have here? Well, here the price would be showing us a change because the change of structure is relevant to me. It is important, but on a lower time frame. For what purpose? So that the price shows me, hey, I don't want to be in that area because I've already liquidated enough positions and now I have the fuel I wanted to keep going down to head toward the point I really want to reach. As you can see, the price is moving downward. This would be the high that has been liquidated, the one I showed you. And here on lower time frames, we're seeing how we could get in. The price would take different imbalances, and here we can switch to other time frames and look for our entry, whether it's on M3, M2 or M1. We want the price to mitigate the imbalances we're looking for. For example, we could have entered here. The price mitigates that M5 imbalance, and on M2 it would be giving us this entry opportunity. Where would we be entering? Basically just above a high in a sell position. Most people would tell you this is a mistake because if the price has taken out a high, the price should keep going up. But what is the reality we find in most days and in most scenarios? Well, this is it. When the price takes out a high, it tends to react. And when it takes out a low, like the one I just showed you, it also tends to react. That's why we're always looking for exactly the opposite. Let's see how the price starts to distribute downward after taking out that point. And after taking out the low, it goes up. After taking out the high, it goes down. Obviously, we can see this on various time frames. We can also observe it on the H1 time frame. Here we can see how the price breaks this high right here, okay? You can see this is a high because it creates the last push that leads to that big drop. It comes from here after taking out the other position, it takes it out. We can also see this perfectly well on other time frames. On the H4 time frame, it takes that imbalance. We would also take imbalances into account. I explain this in more videos on my channel. And after the price takes out that point, it starts that big drop. But not only that, as you can see here on the H1 time frame, after the price takes out this point, it starts that big rise. What happens then? This liquidity grab wouldn't be within trading hours. As you can see, it's 3 in the morning, and here we wouldn't be trading because that's what our strategy dictates. What else can we observe? Well, here we have another low that the price takes out and then makes another reaction, okay? This is on the H4 time frame. You can see this move, which is on the M2 or M5 time frame, we could easily get in. Although here we see that this liquidity grab happened during the Asian session, so we wouldn't be watching the market, but notice how the distribution starts in London. Let's look at more examples. There are plenty more. Look, it takes out this low here, which we could also see on the daily chart. Look at this, okay? A daily low, as I was saying. And notice that after taking out that low, interestingly, a high impact news event comes out during the New York session, and interestingly, the price takes off. It's not just interesting, it's not a coincidence. This happens almost every day, most of the time. But let's go further. Let's look at more examples so you can see that this happens quite often. We can see here that this week, look, the price takes out this high, and right on the pip, boom, a very strong drop, okay? As you can see here, boom. This was the Friday before the week I'm recording this. The price takes it out, and during the London session, I entered these areas with my private group. In fact, you can see on my Instagram how I took this sell. How far did the price go? Well, nothing new. Notice how the price also creates a high here as it keeps dropping. The long-term target is this low, okay? You can see it perfectly on the 4-hour chart. But not only that, notice how the price takes out that high and our drop begins. And not only that, the price takes out this low and the rise begins. Look, it takes out the level precisely at 2 in the afternoon. Boom, and that big rally begins. Here I've shown you how this has happened many times over this week and the previous one. But, well, if you don't believe me, let's go further, okay? I've got enough examples here to bore you just so you understand that this always works. Here's another low, the price takes it out on the H1 chart, and then it goes up. Here's another example, the price forms a high here and then starts to drop. You might say, hey, but that drop is really short. That drop is more than enough, considering that my stop losses are usually between 3 and 7 pips. If there was a 70 pip pullback, just imagine how much time there would have been to get a high risk-reward ratio. In this case, this entry was outside of trading hours. This is 11 at night, so we wouldn't be trading here. But it's just to show you how effective the liquidation of highs and lows can be. I've already shown you quite a few trades here. Here's another one. The price takes out this point, and here's another one. Look, it forms a high and then sweeps it downward. Where does the price go? From high to low. After sweeping this low, the price starts to rise. Where does it go? Well, it goes to sweep the external high we have here. Where to? To the next point we have, and now upward. This is what the interbank algorithm does every week and every day. And this is the strategy with which I've made so much money with prop firms. This is where the video comes to an end. I hope you enjoyed this step-by-step explanation of my trading strategy. And if you liked it, what I recommend is that you do your own backtesting. I don't want you to think that I'm absolutely right or anything like that. Although I have already shown you in several examples during this week and the previous one that this strategy plays out in a very consistent way. And not only that, but I've also backed it up with several dozens, in fact, of payouts from very well-known prop firms. But even so, don't just take the strategy at face value. I encourage you to go to TradingView, FX Replay, or whichever platform you prefer, your trusted platform, and do your own backtesting. Carefully observe the method I've explained. Liquidity at the highs and lows of time frames like daily, 4 hours and 1 hour, and wait for those reactions at the opening of the London Stock Exchange and the New York Stock Exchange. If you find that this works for you and you like this strategy, I invite you to keep watching my YouTube channel and also follow me on Instagram. The link is down in the description, where I regularly post valuable content about my trading strategy. I also explain for free most of the trades I take during the week. I hope this video has been helpful and that you enjoyed it. If you leave me a comment, I would really appreciate it, and I hope to see you in the next one.